Hi there, this is a teaching coming to you from the Training Plate of Excellence, and we are looking at the Purchase Ledger Control Account today. A control account. What does the control account do? It just helps to complete your double entry process. It says that control accounts are summary accounts which enable you to see at a glance whether the general ledger balance for the ledger to which that control account is set up for agrees with the total of the individual accounts held within the ledger. So we will find that the individual accounts could be the purchases accounts or the purchase ledger accounts for the individual suppliers, and we maintain a control account to pick up on all our credit purchases. So it will confirm if your purchase ledger balances are correct or not. So you have the purchase ledger control account. You would also have the sales ledger control account, very commonly used. Purchase ledger control account, also known as trade payables, also known as accounts payables in some cases as well, also known as creditors control accounts, all one and the same thing, and the principle remains the same across them all. We have them, the purchase ledger control account. What goes on to the debit side? The purchase ledger control account, do bear in mind, this is a liability account. And for a liability account, you will find that you want to know what balance does it carry. A liability account will carry a credit balance by default. And if it carries a credit balance by default, it then means that you need to connect your mind to what will cause that account or the balance in that account to increase, and what will cause the balance in that account to reduce. Anything that causes the balance to increase will be credited, and anything that causes the balance to reduce will be debited into that account. Again, I repeat, it is a liability account. By default, it will be a credit balanced account, and if it is a credit account, then anything that will cause the liability to increase will be credited. Anything that will cause the liability to reduce will be debited. And in this case, we're talking about purchase ledger control account. So if you buy on credit more and more and more, the Plca account will increase. So any purchases will be credited. And then, of course, if you are buying, we expect to be paying. If you are paying and paying, what you are owing will be reducing. If you get a refund from the person you paid, that will cause the balance to increase. If you then as well get credit notes being issued to you, if you have a discount issued to you, I'm supposed to pay you £100, but you gave me a discount of £10. That means that I'm now owing you £90. The balance has reduced. If you give me a contra entry is where you buy and sell from the same person, in this case, and you have the customer of yours that you're owing £100, and that same customer is also owing you £50. So you will find that, okay, let's action a contra entry. Rather than you pay me the £50 and I pay you £100, we may just say, you know what, let's knock off their lower amount from each other's account, and I will just pay you £50, because after you're owing me £50, then I have to top up the amount because I'm owing you more. The £50 in there that is owed, or the lower amount between the two parties, will become what you will use to action a contra entry if you have one, and that applies to this case. We want to then look at an exercise, and let's see how that will action out. And in looking at this exercise, I want to use the T account that we have above them to complete this exercise below. Set up the Plca account. It says what's balance owing to credit suppliers as at the 1st of July. That implies to me my opening balance, and that would then be 07 of whatever year. It doesn't really matter. I put in the amount on the credit side. Contra entries, that will reduce the liability. So I go on to the debit side where there is contra entries, and I want to put in the amount. Journal debit, they've given it up itself already in the question. I'm going for journal debit. So on the debit side, just fling in the journal debit and the amount. Then we have goods returned to credit suppliers. So that will reduce the amount you owe. And if you have goods returned, the next thing we'll expect is that you get a credit note for those items that you returned. So I'm going to plug it in there. Purchases from credit suppliers. You were owing me already before. Then you come and buy some more, buy some more, buy some more. Then it will increase the amount that is owed on the credit side. I just throw in that figure in there. Payments made to credit suppliers. So you are now paying. If you were owing and owing and owing, now you have now paid, it will reduce what you are owing. So I throw in there the amount. And then you have prompt payment discount utilized. So somebody gave me a discount if I pay early, or sets of people or suppliers. If you've taken that up, you will then find that the amount that you are owing will reduce. So I plug it into the discount received. And the last and only thing that is remaining is for us to close the account. So you will be expected to find your closing balance. I expect that you know how to close your account. If you do, kudos. If you don't, all that is expected of you is to add the total of the debit, write it down somewhere, add the total of the credit, write it down somewhere, and then get the difference. The total of the credit is higher, so we have 94989. I expect the two sides to add up to exactly 94989. So the balance CD will be the difference that I will plug in there, which is 43,105. I hope that has been useful. Remember, purchase ledger control account is a liability account. Anything that will cause the liability to increase will be credited. You credit liability accounts when it is increasing, and you debit liability accounts when it is reducing. And I like to remember my debits and credits using dead click. Click implies credit, liabilities, income, and capital. You see liabilities is under the credit. You will see when you have a liability account, by default is a credit balance. Also, if it is increasing, you will credit. If it is decreasing, you will debit. I hope that has been useful for you. The rest of it is adios, and please follow us on all the social media platforms. Click on the subscribe button and keep following us on all the platforms. Adios.